Hey, 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 what's up, everybody? What's up? What's up? Welcome to today's video. In today's video, we're going to break down the CPI that will be coming out tomorrow, how I anticipate it to play out, and its impact that it will have on the US dollar, right? So we can see here, these are today's fundamentals. Today, there aren't really any strong fundamentals. Later on, we'll be having this EIA short-term energy outlook, but it won't impact the market, in a major way. About 1 hour and 45 minutes. So tomorrow we have these crazies right here, these major whales, the CPI, core CPI for April and for month and for year, right? Now, these are the ones that are going to shake up the month. They're going to shake the market, right? So what's my take on it? How is the core CPI going to react? We can see the forecast here. It's already 4.0. The previous was 4.0. Currently, they're anticipating it to be at 4.0, whereas the previous for the year, it was 5.6. They anticipated to be 5.5. And this one here, it's 5.0, expecting it to be 5.0. Oh, this one right here for CPI month for April, right? It's 0.1, anticipating it to be, 0.4. That's the forecast. So let's look at the fundamentals of the past month, because, with the core CPI, what it really means, let's open it up. What does the CPI mean? Core Consumer Price Index measures the change in prices of goods and services, excluding food and energy, right? So the CPI measures price changes from the perspective of the consumer. It is a key way to measure the changes of purchasing trends and inflation, right? A higher than expected reading should be taken as positive or bullish for the US dollar, whereas a negative reading should be taken as negative or bearish for the US dollar. Now, we need to actually look at the fundamentals, how they've been reacting for the past month, because this will be for April. As we can see here, it's for April. Release date, no. Right here, Wednesday, May 10th, but it will be for the April month, right? Because obviously the fundamentals always read at the beginning of the month are the reports of the previous month. So to get a clear understanding of what's really going on, we have to look at the reports of the past month to actually get that perspective. Now, to actually have that perspective, we need to look at certain things, right? We need to look at employment cost index, personal consumer expenditure price index. We need to look at reports like the PPI. All these will actually give us the perspective of the consumer. Housing, what's this called? Housing what? Housing change, like the number of houses bought by the people. All of these will actually give us a good perspective of what the CPI will bring, because it only excludes food and energy, right? So everything else is on the table. So first we need to know, first for people to actually have a better perception, like the prices are good to them, they'll need to actually be employed, right? If nobody has a job, it doesn't matter the prices. They'll always see money as scarce. And with that perception in mind, because remember, with this event, it's called fraud change from the perspective. It's not the reality, it's from the perspective. So it doesn't matter if the prices have changed or not, but it's what the consumers perceive prices are, right? So if a consumer perceives as if the prices are good, that's what it is, even if the prices hasn't changed. So it doesn't matter. What it matters is the perspective of the consumer. Now, we can see here, starting off with last week's fundamentals, we see the fundamentals came off supporting the US dollar. Unemployment rate came off supporting the US dollar as it came out lower. That means more people were employed. Non-farm payroll, more people were employed. More people were on the payroll. Average earnings we're up from 0.3 to 0.5, right? This was the ADP, obviously increased. ISM manufacturing prices were good for the, US dollar. Okay, so coming here again, new home sales. Yeah, new home sales. You can see here, more home sales were actually bought. That means more houses were sold, indicating that more people have money to spend because there is better employment. There is, more people getting money on the hourly, as we've seen in the previous report. Unemployment claims, here we can see it came out favoring the US dollar, meaning that less people were actually unemployed and more people were employed, right? Here we have advanced gross domestic product price index. You see it came out supporting the US dollar, meaning more money was coming into the households for April, right? We can see here employment cost rised, right? So all of these are actually indicating that the US dollar last month for April was actually stronger, right? Was actually stronger. Okay, so here we don't really have other fundamentals. These are for the March report. You can see here these were for March. Okay, so with that perspective, we actually understand that more people employed, more people are buying houses, more people are being paid on the hourly. You can see here average earnings is actually better for the US dollar. So my perspective or my report, reading just these reports tomorrow, because it's going to be consumer price index, it's going to assume if people or the consumers will be having a perspective that the prices are actually fairly good, and it will be taken as higher than expected, and that should actually be positive or bullish for the US dollar. So that's my perspective, or that's my breakdown for the CPI tomorrow. I believe the CPI report will come better than expected, indicating that the prices, are actually favoring the US citizens from their perspective, which will actually make the US dollar become strong. So that's my breakdown, that's my analysis, that's what I anticipate for the core CPI consumer price index to bring on tomorrow. Obviously, guys, you understand, like, these analysis shouldn't be taken as financial advice, as it's just a breakdown, just like the technicals. Fundamentals too are also analysis, and they're just, we are using the previous reports to analyze the coming reports and use them as an edge. So if you're going to be trading these fundamentals, manage your risks, please. Don't risk or don't trade with money that you can't afford to lose. And always be looking at the fundamentals for better reports. So with that being said, guys, appreciate you all. Thank you for tuning in with me today. Be sure to subscribe, share with a few friends that you believe will find value in this video. Until next time, guys, appreciate you all. Take it easy out there. Nothing but peace and love from this side.